Okay, hi everybody. My name's Steve Ruffley, trader, presenter, mentor, chief market strategist over in London at intertrader.com. Currently based in New Zealand, and a bit of a new experience for me today. After the many thousands of webinars I've done, this is actually the first one I've done on Webinar Jam. It's the first one, I guess, under my own name rather than just being the chief market strategist and the 7 years I've educated over in the UK. I'm bringing my knowledge over to a different side of the world. So hopefully you're going to learn some things. The kind of format we're going to go through, I'm going to do a bit of a PowerPoint presentation, go through some ideas about trading, to kind of get people to speed. People might be at different levels. I'm going to go through the markets, some kind of live trade ideas, some ideas of how I view the markets, and what the potential opportunities are. Kind of have some questions and answers. Feel free to get on the chat window and ask me any questions you want about trading. I've run a lot of webinars, as I said, for the last 7 years, thousands and thousands. And, I've had a good response from people in the UK and Europe, and I've created all different types of traders, from all kind of level, from beginners. So really today is just a bit of an introduction, to get, everyone to get to know each other. And as the webinars progress through the weeks and months, we'll go through different educational topics of different styles of technical analysis, digging down into the fundamentals. And my style really is not trying to reinvent the wheel. I'm not trying to teach people, technical analysis from scratch. I'm not trying to, teach you things that you might not have heard of. What I'm teaching you to is to make money from trading, to kind of demystify it. A lot of people think that trading's for somebody else, guys in the city, and it's not. It's for anybody who can, form an opinion of their own and understand how you put that into the markets. So I guess we'll just kick off. As I say, any questions, put them through into the chat window. We can go through them as we talk, or maybe at the end of this presentation, then I'll show you some of my charts, some of the setups I've used to manage my hedge funds over the years, and then I've made my money. Let's just crack on. So we're going to go through a little bit now about how to visualize trading. This is really a good introduction of how to view the markets and to make fairly complex things like macro data, kind of a little bit more transparent, and to put it into a bit more relevant of how you turn fundamental news, how you turn technical trading into something you can action, where you can buy and sell and make money. So I think we have to remember that trading is simply having an opinion. A lot of people make it very difficult, and they rely on things that necessarily might not need to. We've all done things in our lives. We all make decisions of where to, go to university, what houses to buy in what areas. You make a decision when you get your internet, or when you go on holiday, or you change money when you go on holiday. All these things are what we do every day, and the market's really there and exist to facilitate us, to buy and sell, different types of asset classes, products, and markets, and get involved. Now, for me, what I've found over the last 7 years is really that traders try to overcomplicate technical analysis. They want to do everything at once. And this is the whole problem with trading. People search for this holy grail and try to find something that's going to give them all the answers. The real key to trading, and it's probably my most important lesson I'll give you right now at the start, is that trading's not about being right. It's about being right at the right time. And I'll go through to that in a lot more detail, throughout my courses. And it's this idea that you're not having to pick the low and the high of the market. You don't have to be right on where the market's going, as long as you can understand how the market moves, for a relatively short period of time, and you can get involved in that volatility and that movement, you can make money. The great thing about being a trader over an investor is that you can buy and sell. You don't necessarily have to hold something, for days, weeks, and months. You can just get involved in the short-term movement. So what we're trying to figure out from our technical and fundamental analysis is a way to validate our views. And, one of the biggest lessons I learned is just having the confidence to know how you want to interact with the markets. So you don't have to be the smartest. You don't have to have the biggest account. You don't have to be the best trader out there. What you have to do is understand how the markets move, how you deal with risk, how you deal with putting your own money into the markets. And then that's how you're going to find a point of how trading is going to work for you. So I generally break it up into my 80-20 rule of trading. And this is something I've talked about in my book and, for webinars over the years. And it's really just kind of breaking things down into let people understand that the markets are always going to move. If the markets don't move, nobody makes any money. So that's your hedge funds, your banks, your individual traders, everybody involved in the markets. If they don't go anywhere, then the markets, can't allow people to make money. Back when I first started trading things like the Bund, for instance, you'd have to lean on a bid or an offer of maybe 1,000 contracts and wait an hour or two to get filled. That just isn't the case anymore. There's markets moving from price to price all across the board, within a second's notice. So there's always opportunities to trade. So this idea the market's going to move the bulk of the time, that 80% they're going to move technically. So that's everything to do with your charts, your indicators, your trends, your oscillators. So when you see anything on the news, you see that Bloomberg chart, with a big line of something's dropped or gone up. That's just a line chart. Yeah, that's just showing you something's moved. But we can drill down into all the different types of charts, all the different types of indicators. And again, I'll show you the setups I've used to manage my funds over the years, and hopefully it'll make these things a lot more clear. Then the 20% of the time, you've got fundamental movement. So this is things with news, data, people like Trump. Now, believe it or not, there was a time before Trump and a time before Twitter where the markets didn't really move off a president's comments. That was reserved for movements from the Fed, the people that control the economic policy. But now Donald Trump jumps on Twitter. It can affect individual shares. It can affect currency. It can do all things. So what we're trying to figure out is how we visualize that, how we put these things into a tradable action. So we're always balancing up what we know is on the screen, looking for the technical overbought, oversold, looking for value where we buy and sell, how we view that physically on our screens, and then marrying up the sentiment of the market. What's happening behind the scenes? What are people thinking about the global economy, about growth, GDP, job numbers, interest rates, etc., etc. And all these things come together to give you a rounded picture of trading. So a lot of people will say that you can just trade technically, a lot of maths based traders, a lot of quants, but you can't, because if you miss out that sentiment, you will get something completely wrong and you'll wipe out your account. I know, because I've seen it a million times. You can just be a fundamental trader, but then it limits the amount of times you get involved in the markets. So it's finding that balance of understanding why the market's moving and how. So the fundamental side. So the 20% fundamental is where you should perhaps start, because that's what people tend to think is too complicated, and they think that trading is not for them because I'm not an economist. You don't have to be an economist to be a good trader. Some of the thickest people I've met have been some of the best traders, and that's just because they do what they need to do to make money. They stick to a simple set of rules. They get involved in the markets. They don't overcomplicate it. They don't overthink it, and they just go out and make money. So again, does help if you have a modicum of intelligence to be a trader, but I can hand on heart say it isn't essential. So remember, when we're talking about trading the markets intraday and for short term, we're looking for value. Unlike an investor who always need things, for seemingly to go up. What we're trying to do as an intraday trader is do market neutral, meaning that we can find value buying and selling anywhere in the market. Okay, so we're just looking at the 15-minute chart, the hourly chart, intraday highs and lows. We don't necessarily just have to, rely on something going up. That's why people get sucked into Bitcoin. They think they want to be Bitcoin traders. They don't. They just want the end result. They want something to go up from a price to another price very, very quickly and make money. Now, I'm not saying that Bitcoin isn't a viable product to trade, but after 15 years of trading the markets, I haven't traded Bitcoin. And if I did, I'd be selling it high. There's $4 trillion traded every single day in the FX markets. You only need a tiny, tiny percentage of that to make money. I've made much more money than the average trader has, and it's certainly much more money than your bog standard cryptocurrency traders, that's for sure. So I trade things where I see some value. Right now, I'm kind of dipping my toe into the crypto stuff, and that's only because Goldman Sachs are involved now. You have institutional money, you have liquidity, you have some credibility. Yeah, I want to be charting. I want to be looking back through the months, through the years. I don't want, some new data. If you're thinking back to the cornerstones of economics, like Dow theory, Dow theory states that a price is where it is because all the known information is there. Well, we don't even know who invented Bitcoin. There's a million Bitcoins out there owned by somebody. We don't know who they are. So how can that be having all the information? So for me, when I'm going back to what I trade, I'll stick to things that I know: FX, the indices, stocks, commodities, things like gold. Things that have been around, been there, done it, got the T-shirt type stuff. So I think a lot of people struggle when they talk about trading because they think good, is up and down is bad, and it isn't that at all. Markets will move in cycles, and that is from the FX to the stock markets that we've seen this big bull market. Things will move and they will correct. Nothing can go up forever. It's actually good that markets correct and go down, because that's profit taking and allows people to find a new base of value. So you need to kind of, when you're talking about the trading mindset, and absolutely, you can buy shares if you want, you can buy into a longer term view. But it's just coming down to making the markets work for you. I can be in a trade for a minute and make as much as a person can do in a week. But that's obviously the size I trade and the experience I have. We can break that down. You can do an hour's work a week, and that could replace 50% of your income. All it is putting all the different parts of the equation together and to making it work for you. So remember, this fundamental side, that builds up the sentiment of the markets, and that's people's opinions. So this is retail traders, professional traders, banks, hedge funds. It's a lot of opinions. When you talk about market commentary and you listen to what's being said, a lot of times you might hear the other comment priced in. So if like the great example is the UK. So 2 weeks ago we were 90% certain that there was going to be an interest rate hike. Then some bad data, and we swung within the space of a week from 90% market had priced in a rate hike was going to happen. So a rate hike is good for the pound, as in people are drawn into the pound and it goes up. Then all of a sudden we're at 10%. There's going to be a rate hike because of disappointing data. So that's a big shift. That market sentiment has changed, and people then sell the pound because there's less chance of a rate hike. Therefore, there's less demand. So all just opinions. All these things make the markets move. Now, your opinion is just as valid as anybody else's, especially if you put in your own money into the markets. Now, I start these things off, fairly lightly, and we just brush on things. As I've said, I go through all the different services I offer, and the VIP webinars, which are a little bit more drilling down into it actually physically make money. What I ask you to do is open a live account and just put a modest amount of money in, because you're never going to have that emotional connection until you're trading with real money. You can sit on a demo account forever and think that you can make it feel like it's real. You can't. Okay, I've trained hedge fund managers, I've trained traders, I've done it all, and I know what works. As I said, I'm just taking a winning formula for what I've done in the UK and Europe, and I'm just bringing it down under. People don't know me, so it's quite a new experience for me. Back in the UK, I've been in all the press, all the media, thousands of webinars. I'm a chief market strategist, written a book. So people know me, people are following. But I decided to move to New Zealand, and again, it was a calculated bet. I'd never been to New Zealand before. I just thought with Brexit, Trump, I ran the numbers, 4.8 million people, the same landmass as the UK. It might be a good place just to kind of hide away for a couple of years. So that again, was one of my kind of factors, my analysis for coming over here. And that was one of my trades. So what I'm trying to do is just to get a gauge of what you guys want to know, what's going to help you. I know there's a lot of interest in trading, but I don't know is that perhaps the same as it was in the UK. A lot of my core customers came from London, and they're typically men of a certain age with a certain profession, and these are people who've gone on to make very successful and very very wealthy. So it might be slightly different here, and that's why again I'm trying to keep things fairly generic in these early webinars, so we can all get to know each other. And I can figure out exactly what you guys want, because there isn't anything you can ask me that I don't know, and that's not an arrogant, big-headed thing. It's when you've taught as many traders as I have, and when you've done it for this long, there are no right and wrong questions. You can ask me anything. I will give you my honest opinions, and that's just the way these things work. So again, when you're looking for that fundamental news, that sentiment, you've got to think where it comes from. And it's all free these days. Back when I was trading, I had to pay £2,000, £3,000, £4,000 sterling a month for my desk. I needed my CQG, my professional charting system. I needed my add-ons to trade TT in the market, direct market access. I had to pay for my desk. I had to pay for the lights, the internet, all these different things. I had to pay for the Reuters terminal, your Bloomberg terminal, and all these things added up. But now if you want to know if figures are coming out, you go to something like fxstreet.com, a site that I've presented on for the last 6 years. I've brought my webinars again, across to their audience. I've been nominated for one of the best presenters awards, etc., etc. And all this stuff is free. All you do is go into filters, show me the important economic data, like we've got the RBA, meetings minute. This is going to create sentiment. This is going to affect the Aussie dollar. These things are important. If you know about it, you've got a nice big red, line here to tell you it's important. All you've got to figure out is how that, is going to change or potentially change the sentiment, and understand where you should position yourself long or short if the Aussie dollar is going to get more valuable or less valuable in a period of time. And that's trading. Bang, easy. Then we've got things like Bloomberg. We've all heard of Bloomberg. Again, this is where you can get your general market news from. And you get this, from anywhere. You can look at the FT, you can look at Reuters, you look at, your local news. Information is so readily available. But what I would say is it's all about the quality rather than quantity. You want to get the right kind of information. A lot of people jump onto Twitter and get unsubstantiated news. And well, that can be good and give you a slight option now and again. It's the credible news where you're going to get the biggest movement, because credible news brings people in, and that is what changes the sentiment. If only one or two people are looking at news which might not be true, unless they've got billion dollar accounts, they're not going to be able to move the market. So you've got to go with the the sentiment, with the market majority, and that's going to come with people who look at trusted, tried, credible news sources. So again, when you talk about any kind of longevity in the markets, anyone could predict anything. I predicted the market correction in the Dow, and that wasn't any kind of claim to fame, no pat on the back. Any idiot could have done that. What I was saying is that when we saw the correction in the market, it'd be like a move we hadn't really seen before, and that's what happened. We had the biggest move in the Dow that we'd ever seen. So these are the things. It's not about being right. It's about being right at the right time. I know a ton of traders who've shorted the stock market over the last 6, 12, 18 months and been absolutely wiped out because the market's kept pushing up. So we're trying to think about things like a recession, market crash, housing bubbles. Interesting. Again, I came over to this side of the world. You guys haven't really experienced that yet. You've got relatively, high interest rates compared to the rest of the world, and your property value has kept going up. On Australia, 27 years without recession. New Zealand house prices, seem to go up unsustainable rates. Well, I've seen the average wage over here. But, so if you're living in Auckland, there's no way you can afford a house. It's as simple as that. So, there are things that are going to change, and it's trying to figure out how you position yourself, when the inevitable happens, because nothing happens. A recession needs to happen in economies. It needs to reset. It needs to, kind of look around. So it's not doom and gloom. It might be doom and gloom for some people, but for us as traders, it's just an opportunity. So again, it's understanding where to position yourself, what the currencies are going to do, what the indices are going to do. If there is a global, correction, is it people going to move into, gold as a safe haven? Maybe Bitcoin or cryptos come out. So remember, investors, lock their money in for months, years, and decades. They phase out the noise. But traders, they look for that noise, for the movement. They look to buy and sell value where they see it. So, my trades can last for seconds, minutes, hours, never days, never months. That's taking an opinion. I just want to see those markets move. I just want to see some volatility. I want to be in, I want to be out, taking my money off the table, taking that risk out of the markets. So again, all the data is putting these things together, right? If the markets and the big traders move in baskets. So they're not just trading one currency pair, they're trading baskets of currencies against each other. Okay, or they're trading baskets of currencies versus stocks, or currencies versus gold, stocks, commodities, a balanced portfolio trying to bring in the bigger picture. So, you think about putting these things together, if you're breaking it down into the ultimate kind of simplistic views, how's an economy going to grow over the next 2, 6, 12 months? Yeah. So what's a country's GDP? GDP, gross domestic product, is the broadest kind of spectrum of how a country is performing, what it's doing. So we have to look at these factors overall, put them into our bigger picture, understand what that data is going to do, what it's going to affect in a market, be it currency, indices, etc., where we're going to find some value, and what our trade is. So when I say visualizing it, this is what I mean. So you think about what's happening in the US, what's happening in the UK, what's happening in the EU, even what's happening down in Oz. So you think about the UK. GDP's gone down. What are the factors? Brexit, uncertainty, jobs linked to that, gone down. Inflation, it's up. Yeah, the pound got hammered. Low pound means inflation rises above that 2% target. So interest rates have to go up to deal with that inflation because of the bad data. Interest rates have now just been able to be held in the short term. So how are these things going to affect? Well, if you're trading the UK's situation versus the US, well then you look at things like the pound, US dollar. So maybe. Yeah, if we're seeing GDP's up, interest rates can go up, more demand for the dollar. Yeah, so you sell the pound dollar because this is the leading month. Yeah, this is the leading contract. This was the strongest currency when this pair was created. So this is the pound expressed in dollars. So if you think that the dollar's going to go up, then you sell the pound because then you're buying the dollar. See? Not that complicated. That's the FX markets explained right there and then. So you can have the EU versus the USA, the EU versus Oz versus the USA. Yeah? All the currency pairs are there for you. And again, it translates into the indices. Now, indices are generally correlated. Well, if the US under Donald Trump and his tax cuts and his plan to make America great again, well, we've seen that drag up stocks. Well, it's dragged up stocks. You might find an opportunity when the FTSE, the UK, has been bad data, but it's really dragged up by the USA, yeah, and the bigger global picture. So a low FTSE, if the US is going up, could be a buy. Doesn't mean it's going to go from a low to the high and be up there forever, but it's just, visualizing how you can put this easy to access information into some sort of trading idea. So we're starting to build up a picture now. This is not that complex. Data is just how a country is performing. Countries, again, have currency. How they perform against each other. Think about that wider picture, the baskets of goods, get involved. Other kind of sentiment factors you have to think, obviously lots of things in the news. We've got tensions between the US and Russia, tensions with the US and potentially Korea. We have Brexit. Yeah, what's that going to affect the pound or the euro? Who's going to win out of that debacle? So again, think about the positives of the UK. It's just still, been taken over by California, but it's still recognized as the 5th largest global independent economy. Then, the EU, the USA. So again, think about in global terms. If the US is going to remain dominant and the interest rates are going to go up, is there more demand for the dollar over the euro, over the pound? Is there more demand for US stock? Yeah. Then we've got other things, new trade deals potentially in the UK. You could see that as a positive. You can see once to get outside the EU, things could be better. Then there's the negatives: high inflation, Brexit. Yeah. The UK leaving the European Union, China and the trade wars. All these things, have the positives and negatives. So it's having a broader opinion on these things and trying to figure out where you sit, where your understanding is. And, again, these things aren't complex or complicated. And you can read them in your daily newspaper. And it's just keeping abreast of it and figuring out, where the potential, opportunities could be. So again, we try to figure out, the key points and understand, what this sentiment means, how it filters through into the markets, what you're going to trade, what are these global markets, you're going to move into. So the indices, you're just trading, the markets we should all have heard of. You could be trading the S&P or the Dow in the US, the DAX in Germany, the FTSE in the UK. All these markets are there to be seen, and they're all moving generally correlated together, going in one direction. Then the FX, as I've explained, that's just the first currency expressed in the second currency. So what's going to affect that? GDP, sentiment, your Brexits, your Trump, your trade deals. All these things are going to say, does the global community want more of this particular currency than another? Then your commodities, oil, been in the news again, back above $78. Do we all think that Elon Musk is right? Is everyone going to be driving electric cars? Everything's going to be solar powered and wind generated? Yeah. Well, if it is, then there's no need for oil. So oil has to go down. The only reason oil is up because of supply constraints, and it is a finite product. It's one of these. It will run out at some point. It's inelastic demand. So if people always want it and you can control the supply, you can control the price. Easy. Okay, but we know that the kind of Saudis are moving out of oil and trying to, build these big, sovereign wealth funds and, tourism and get out of their oil business, because we all know that there are other ways to kind of get around the globe and to do things outside of oil. But in the meantime, where's the opportunity? Where's the value? So again, going back to the kind of this fundamental data, generally we're assessing it from two factors, and this is where it can get a little bit more complicated. When you think about, is the market focusing on growth data or inflation data? We've had 10 years of quantitative easing, so we kind of don't know where we are right now. That's the difficult point, because we know inflation, is generally creeping up, but because interest rates have been ultra low and people have, borrowed up to the maximum level, we can't just put interest rates back up to, the 10, 15% we saw in the 80s, because nobody can afford to service the debt. So growth is linked to inflation in that, the stronger growth the economy has, like the US, they can put interest rates up to support that. Yeah, and that again will have its control on inflation. So, we talked about growth. That's the economy expanding, innovation, trade, et cetera, et cetera. So examples of that are the non-farm payrolls, job creation in the US, GDP figures that we spoke about, sentiment figures, retail sales. All these things will be released from all different countries in the world. Again, China's another big one we have to mention. And if that growth continues, then that can bring demand. So the other side of this is inflation. So that's the rate of which the general levels of goods and services is rising. So the purchase price of that currency, falls as inflation goes up. So that's what we've seen in the UK. The pound can buy less because inflation is high. And that's all to do with the sentiment, Brexit, everybody deciding that Brexit was a bad thing, it was unknown, and people dumping the pound for other currencies. So as the pound fell, people went into other currencies. As Brexit is known, people will go back into the pound. So all I've talked about on Twitter, if you follow me, is basically buying the pound low. I'm 6 figures long the pound, and especially against the New Zealand dollar. I think the New Zealand US dollar gets down to 0.65, and the pound Kiwi gets above 2. Easy trade. But again, that's more taking a view. That's a longer term big position. In the meantime, you can just buy the highs, sell the lows, get involved in the noise. So technical. Now, this is where we look at the charts, the indicators, the oscillators. So market's going to move, the majority of time because there's just more data. There's more people sat in front of a candlestick chart or, charts with indicators, oscillators, then you get news. So, when you see traders with their 8 screens, again, done all that, been there, done that, the big kind of trading floors, used to run them. And, that's what people sit around all day looking for technical opportunities in order to find value for any amount of time and buy and sell. So what we're trying to figure out is, how do we understand this? What works for us? Is it going to be a candlestick chart? Is it going to be a line chart? Are we going to use moving averages, Bollinger Bands, support, resistance? What do we do? This is an example of something I use all the time, Fibonacci. Again, something we'll go through again in a different webinar because it deserves its own topic. I've written books on this. My hedge funds have been run on Fibonacci, my algorithms, and lots of kind of basis of my technical analysis on my own trading. First thing I'll do is look for Fibonacci. So essentially, Fibonacci is going from the high to the low. Yeah. So you can see from these points, no new high has been made, no new low has been made. 80% of the time, a strong directional move, which this is down, will retrace the 50%. Yeah, there's the 50%. So 7 4-hour candles with no new high or no new low being made, you get to that 50%. So what you do is you buy low. Buy the 23.6, 38.2. Yeah, it goes around. It's a little bit volatile, but then it goes up to the 50%. And there we go. There you go. You've made some money out of trading. So all these things, are very kind of subjective. So, you don't just draw a Fibonacci on any old chart and it, just works and you make your money. But that's an easy way of just seeing, if a market's moved in a strong directional manner. Yeah, you can draw a Fibonacci and all of a sudden you have places where you can buy, sell, target, entry points. And it makes that, that meaningless move, a little bit more transparent. So that's all technical analysis is, high probability strategies of finding some movement and understanding, where the markets have been and where they can go. And that really is, again, the art of trading. So indicators and oscillators are kind of secondary aids to help you with the opinion. So oscillators sound complex, but just an indicator and have a scale between 0 and 1 or 0 to 100. So you'll hear about RSI, the Relative Strength Index. So that is basically market below 30 is oversold. So you can find, periods to buy low, and then over 70 is overbought. So that's high periods to sell. So again, it's just adding things to your charts that make more sense. Now, obviously, we'll go through these things in more detail. You can build a picture of what could potentially work for you. And again, when you show you my charts, I'll show you the combination of how I view all these technical indicators and how they are just second nature to me. So again, when you put these things onto your charts, things like indicators of this. So these are Bollinger Bands, created by John Bollinger. They're just 2 standard deviations around a moving average. So this is your moving average here. When the market moves above it, it goes up. Below it, it continues down. And this is your upper region of resistance, your lower region of support. Then you can have other things like trend lines. Yeah, it just gets low. So when it gets low to these points, you buy it. Yeah, and then you can add in things like your Fibonacci, and you see how the market gets back to that 50%. Yeah, and how the markets move from highs to lows. So this is just a very kind of brief overview. We can certainly go through to all these things in much greater detail. And again, when you start to see my charts in live real time, you'll see how I can quickly make decisions. And and that's really how professional traders work. They're just looking for all the things to match up and then trading accordingly. So when you're looking at the correlations of indices, as I said before, they're all generally going to move in the same direction. So, this is the whole thing, markets move in waves, they move in trends. So when the US and Dow and the S&P are going up, generally the other markets around the world will move. The FTSE will move. The DAX will move. And again, all we're looking for is these correlations. So, the UK and EU seem to be moving faster than the US because US is a much harder and faster sell-off. So maybe there's opportunities to buy low. So as you see the markets reject and you're buying low, and you can sell high. So again, all the correlations, at least the markets are moving in the same direction, not the same velocity or the same kind of directional power, but they're still moving from low to high, and that's markets being closely correlated. So again, stocks go up. That seemed to be risk on, people taking risk, buying risky investments. So you think the other correlation you can look at is gold. So markets go up, gold goes down. So again, these are the things you build up a picture. Then you got the same thing in the FX markets. That's coefficients. So FX pairs have their own correlations. So again, I spoke about the euro dollar and how currencies are put together. So this particular currency pair is the euro, expressed in dollars. So the euro priced in dollars. So again, if we're looking for a technical or fundamental break in the euro, that's if the euro gets particularly strong or weak, that's going to have an effect on other euro-denominated pairs or other currencies. So what we look at is things like this, the FX coefficient table. So what we see is the euro Japanese yen is highly correlated to the euro dollar. So, the euro is very strong versus the dollar, then it's going to be very strong against the yen. So we just see how to work it out. A negative correlation is minus, positive correlation is towards 1. So when you've got a 93 correlation, over the 1 week, so we see that 0.93 is generally about as high as you're going to see. That if that euro against the dollar goes up, then the euro is definitely going to go up in a positive way against the Japanese yen. So that's how you can build out. And these coefficient tables, you just have to Google them. They're easy, but it's pretty obvious, isn't it? Kind of dollar's weak against the euro, then it's going to be weak against the CAD. That's like negative correlation. So again, fairly easy things to work out. So the roundup is that people searching for that holy grail of technical analysis doesn't exist. I'll show you my charts in a minute, and I'll show you the indicators I use, and I'll show you how simple they can be. It's quality over quantity. People think if they understand economics, they know the markets. They don't. Economics is for quants. It's for people that want to understand and be right. The markets and understanding how you interact with the markets are people that want to make money. They're two very different things. So trading's not always about being right on direction. It helps, but again, it's being right at the right time. And markets have to go down. It's not always that markets going up, everyone's making money. And again, if you have the right kind of risk strategy and you trade the markets in the right kind of way with the right risk profile, and you balance out your winners and losses, you can be wrong every other time in trading. You can be wrong 50% of the time and still make money. And so a lot of people don't know that. But if you keep the right risk reward ratio, you don't let your losers get away with you. You bank your profit when you say you're going to. You can be wrong 50% of the time and still be profitable. And that's a really powerful thing. So I guess how I can help you. This is the first webinar, hopefully the first webinar of many. So, how it's going to help you, it's coming down to these things. I'm going to do the free trading webinars because I need to get my name out there. I need to get people, listening to the webinars and following me and interacting with me, asking questions and speaking. Then the next step, if you want to know how to make money from trading, well, that's the VIP webinars. You have to have that investment in yourself. Now, remember, all my services are free. So all you have to do is open a CMC account. You trade with them because they're based in every jurisdiction that I work in. I've met the guys that run it. That protects my reputation. 7 years, and I still am the chief market strategist of Intertrader. However, they don't operate in this jurisdiction. So as I moved over here, I had to find a new company to partner with that I trusted, could put my funds in, and could lend my reputation to. And that was CMC. They're listed. They have offices, in Singapore, in Australia, New Zealand, and Hong Kong. And what I asked you to do is put a $2,500 dollar equivalent into a live trading account. So at least when you're following what I say and following what I do, You can learn for yourself and you can trade with real emotion. Now, after that, I've got my tier traders now, tier 1, 2, and 3. I'll be quite honest, money makes money. I'm not ever going to lie to you on these webinars. And the more money you have, the more time you buy yourself. What's interesting is with ESMA and MiFID regulations that have come into the UK, they've actually stopped people trading on margin. So that means that people used to trade on 400-500 to 1 leverage. So that's 400 or 500 times the amount of money you've got in your account you can put into the markets. And that's been restricted for non-professional traders to about 30 or 40 to 1. So you have to have literally 10 times the amount of money in the account that you did do. That stopped a lot of small account traders being able to trade. So my traders, tier 3 are generally 6-figure. And these are the guys that are going to make 20% returns, a month plus. Okay, they have bad months, and some do lose a lot of money. But, the majority of my top tier 3 traders do make money. And that comes with my mentoring. It comes with my charts. It comes with all the other things that you get with having someone like me in your corner. You can get your own bespoke spreads. I can get you cash back on every trade you do. All these things, help at a certain level. So it's kind of, stick with me with the trading webinars, ask me some questions, speak to me on Skype. Let's get to know each other. Put some money into account, start trading live, start to get them. Then when you want my individual one-to-one help and really take it to that next level, 5,000, it's going to get you some time. 5 to 25 is where realistically you need to be if you want to kind of, make some good money from trading. And as I say, 25 above, 6 figures if you can get to that level. That's where you're going to see the real money. So again, this is not pie in the sky, it's not fantasy. This is what I've done with hundreds of traders in the UK. And people say, why do I do this stuff for free? Well, I make my money from trading. So I don't have anything to prove to anybody. A lot of my tier 3 traders become friends and they become business associates. Now, what you will know is when you do trade full time, it's a very lonely game. You can't talk, to your partner about this stuff. You don't want to tell your kids. Unless your friends trade, they're not interested. They're interested when you make money. They just think you're an idiot when you lose money. So trading is extremely lonely. So to have somebody there you can speak to is a very powerful thing. And that's what I've found, again, with just the 7 years of doing this in the UK and Europe. So what I'll do is I'll go through my charts. So this is it. This is how I interpret the world. I don't need anything else apart from these 8 charts. I've looked at these charts for thousands and thousands of hours, and I can tell you what's going on in the world. So talk about these currency coefficients, okay? Well, you got the euro dollar here. So euro dollar is going down, okay? And that's mainly because the dollar is going up. The dollar's going up because of potential interest rate hikes. We've got another 3 this year, yeah? Trump's in. Economy is growing, more demand for the dollar. They've got the biggest army, etc., etc. So dollar goes up. Euro got Brexit. It's got its own issues, problems with Greece still, problems with the Italian banks. So it's not a rosy picture there. So as this goes up, this goes down. Coefficient in action, easy peasy. Then you've got the pound versus the dollar. Now, pound against dollar is a bit of a different one because we've got Brexit. So you can look at across to the euro. How's the euro doing against the dollar? How's the pound doing against the dollar? Yeah, I'm still buying the pound low because I don't personally think Brexit's going to be the end of the world. I think it's going to be a disaster. Okay, then you've got the FTSE here. So the FTSE bouncing off the lows, people are buying into it. Then you've got the DAX. The DAX in Germany hasn't moved so much, so there might be news out of the UK which has been more positive. Yeah, then you've got the S&P, which kind of really leads, the main indices around the world. And just for kind of risk off, I've got the Swiss stock market here, the SMI. And, let's face it, where's better to put your money in times of uncertainty than good old neutral Switzerland. So I always keep an eye on that because any big movements in that can be a gauge of risk on, risk off. So easy. If you want to see more about, the kind of overall movement, you bring out your charts. You look back and, where the S&P has been monthly. Yeah, all these rejection points on these fibs, market's gone higher. Rejection, market's gone higher. So as you come through the time scales to the weeklies, this trend line looks interesting above that. Okay, so now dailies want to get interested. This is where I can start to make an opinion. So we buy along the trend line, buy along the 50%. And as you get then to the hourlies, yeah, you see even clearer your Fibonacci's, yeah, where the low points you want to buy and the high points you want to sell. So the low points, you buy it. You can make your 10, 15 pips. Your high points, you can sell it. Make your 5, 10 pips. Yeah? All you're looking for is the movement up and down, not the point that's gone from here to here. Look for the movement. And when you start to break it down, again, this is what I like to show people. is you break it down to this. So when I'm an intraday trader, I just find interested, market I'm interested in. Look at the dailies. So we've gone up pretty aggressively, closed with, below some resistance. So maybe it's a time to sell. So you look at the hourlies. We get to the red extension points on the fib. Wow, there's some plenty of selling been going on. Then shorter still into the 15 minutes and the 5 minutes. You can hold a trade just from here to here, here to here. 1, 2, 3, 4, 5, 6. Half an hour trade. Yeah, if you sold on the red lines, buy it back here, you made 20 pips. 20 pips and $100, $2,000 in half an hour. Easy. Yeah, who wouldn't want that? Okay, so again, it's just understanding how the markets are moving, how they're performing. And again, these are your indicators here. Yeah, so oscillators. Yeah, that are between 0 or 100. So the market's green. Yeah, time to buy. Yeah, easy as that. So it's building a picture on all the different time frames of what can be achieved and what you're trying to get out of trading. So the whole point isn't trying to make trading overcomplicated. It's seeking out that fundamental information which is free and in the news and the economic calendars, and then it's putting it into a market that's going to be able to facilitate your short-term trade. So as I say, you might be still bullish the stock markets, so you look for these low points and these greed points to buy, yeah, and just get out of the next one. Yeah, so it's all building up that picture in your head of where a market has been, where it can go, and in the meantime, yeah, where you can make your money. So has anybody got any thoughts? Anybody got any questions they'd like to ask? I mean, just put that into the chat window. You might be new to Webinar Jam, as am I. So I have the chat window open. So just kind of, if anybody wants to type anything and ask me any questions, then fire away. You obviously would get a webinar link to the recording of this. You can kind of go through it at your leisure. As I say, what I'm going to try and do is start off, with some educational stuff, some kind of like really tangible stuff you can get your head around, and then we'll go through the markets, discuss some potential kind of trading opportunities. And then what we'll do is, kind of go into these things in a little bit more detail, and maybe when we do, get the numbers up, or like I do in my other sessions, we can have people ask me questions, and some things we can gain from. There are no right or wrong questions ever to ask me, because you might be helping somebody else out. And the great thing about these kind of webinars and courses is there's no upsell. So it's not like your Sam Ovens or your Tony Robbins where you finish this and it's like if you want to kind of go to the next level, you got to spend $7,000 on a course. I'll turn up at this time every Tuesday, and help you out. If you want to go a bit more deep into this stuff, then you have to have the emotional connection. It isn't for me, it's for you. Put some live money into an account and actually trade and see how it feels and how these things work out. And then once you get comfortable doing that, invest some proper money in yourself. Because remember, you're not giving it to me. You're not paying me a fee. You're not doing me, any favors. So put it into account, in your learning, and I'll give you some more time and some one-to-one help, and build you through your own trading strategy. Now, this art of mentoring is incredibly difficult. A lot of people can't do it because they don't know themselves how they trade. But because I've taught so many traders, it's almost become second nature to me. So everybody's different. I can't tell you what the mentoring is going to actually entail because it's different for everybody. It can be, a video call. It could be a Skype call. It can be a series of Skype calls. It could just be chat. Some people that I mentor, I've never actually physically spoken to. Right? I've got other traders, one particular woman who's a surgeon, who when I do talk to her, I call her by a different name because she becomes a different persona. So when she's a trader, when she's a surgeon, she's Alice, for example. When she's, a trader, she's Barbara. People do all sorts of crazy things to get involved in the markets. So as I say, this mentoring side is something that a lot of people don't offer because they don't know how to. So if you are serious about trading and making money, there's a lot of things, a lot of time, a lot of heartache you can cut out that I've just helped with my own trading and helped, literally thousands of people now, in the UK and Europe, get to that next level. And not everybody's going to make it as a trader. I'm well aware of that. Some people will lose money and they won't be able to trade. Other people will just take to it naturally. At the end of the day, what the mentoring is really for people that have tried and failed, people that aren't getting the returns they want, or people that just want that extra edge. Or as I say, sometimes just have someone to speak to. Someone's got skin in the game. Somebody understands what they're going through and can just give them, a sounding board to bounce upon. Again, if you can speak to someone like me, a couple of times a week, why wouldn't you? What have you got to lose? Okay, couple of things coming through, which is great. Training for a long time with limited success. Never had a mentor. I think it's what I've been missing. Yes. Okay. Right. I think, well, as I said, the mentoring is different for different people, and what might work for you might not work for other people. That's down to me, to kind of figure out. I mean, if you've traded for a long enough time, you're going to have some emotion. You're going to have, some things to kind of back this up with and say, I felt this at this time, or I tried this style of trading and it didn't quite resonate with me, or I was always doing this and that didn't work, or I was always tried doing this and it didn't work. So this is the really, kind of powerful thing. I can identify these things in you probably before you can. You could. The thing I equate it to is if you go to your local sports shop and spend $5,000 on a set of golf clubs, you don't expect to go out on the course, do you, and be Tiger Woods? You don't, and you can't. So you get a pro, you do some lessons, you learn off someone who's just done more stuff, and who's just maybe just been in the markets that little bit longer. And this is what I am. Somebody who's been doing it for 15 years. And it's not just that I've been successful, I've taught other people how to be successful. So what I'm trying to do is get into your mindset, get into your groove and help you out. Why would I not make you a better trader? Why would I, kind of not be of some sort of help in that kind of context? Okay, Andy's just asking, hi Steve, what kind of risk-reward ratios do you work to? Great question. I could tell somebody's a trader off the bat. I mean, when you're talking short-term trading, you're looking really for kind of 2 to 1 or 3 to 1 risk-reward ratio. And, again, that's because you're only really looking for them short-term movements. If you're looking to be a swing trader, you're generally trading smaller size and you're looking to kind of get out, at the extremes of the markets. So risk-reward, is a very important style of trading. And I would say for your scalping strategies in your short, medium term, even in these volatile markets, you could probably push it up to 1 to 5 max. But you don't really want to go much higher than that, because it means when you do have that losing trade, if you're not absolutely, with your stops in or very, kind of rigid of where you take your money out of the markets, you're going to let them losses run away with you. And that dents your confidence, it dents your bank balance, and, it affects your trading. So for me, when you first start to trade, it's imperative that you use stops, because as I say, with the right kind of risk reward ratio, and the right attitude to risk, you can be wrong every other time in your trades, and over a course of a week, a month, you can still make money. So that's a very good question, that Andy. Thanks for that. Okay, seem to have a lot of Andys in the room today. That's good. That's good. That's a correlation we've seen already. I mean, these things, guys, we could talk about trading for hours. If you want to get a bit more from me, you've got, me on Skype, Steve Ruffley. In these early days, I'm willing to give a bit more time early on. Generally in the UK, you have to open an account. You have to show me that you're serious. But, this is the first webinar I've done. Obviously, I've done thousands of webinars, but this is the first webinar of this type I've done this side of the world. So it's going to take me, a good... few weeks to get my numbers back up. I have hundreds of people in my webinars, hundreds and hundreds, for my live sessions. So it's going to take me a little bit of time to get my name out there. And, really, I've only been advertising for a week. So trying to build it all up. You can all help me. If you like what you're hearing, send them to steveruffley.co.nz or steveruffley.com. You'll be directed. And, the more people we get, the more enjoyable it is, the more questions we have, the more kind of group mentality we have, and we can all learn from each other. At the end of the day, I'll put my reputation on the line. I'll answer any question honestly about anything. And I'll tell you the truth about anything. Yeah? And I'll tell you if you don't think you can make it, because I'm not going to let you waste my time if I don't think you can make it. Yeah? Then you have to go away and prove me wrong. Now, as I say, there's not many people out there that can give a service like this for free. But that's because I make a lot of money trading, and that's who I am, and that's what I've done for a long time. So, as I say, this is great for me to get out to meet other traders, to get a feel for what this side of the world requires. And every question you give me and every bit of feedback and comment is greatly received at this early stage. So, I mean, as I say, if you want to kind of get a feel for what's happening in the markets, all you have to do. Again, it's this is why I love things like CMC markets. All of a sudden, all the things that I paid, £500 a month for Reuters, free. Insights from analysts, £200 a month, free. CQG, my charting, £250 a month, free. News tickers, your economic calendars here, nice little, idea of a snapshot of the ticker where the markets are going. So all you have to do is do some analysis, go into your charting screens, very much of a similar setup as I had. In fact, it's the same setup because that's what I've used. See where the market's high, the RSI, sell it. Hold it for, maybe a couple of hours, made you 20 ticks. Easy peasy. So looking for these correlations. Dollar goes up, pound goes down, euro goes down. Yeah, being right at the right time. All this multitude of information or of services on your fingertips for free, for nothing. And remember, as I say, the regulation of MiFID that stopped people trading on leverage, so essentially killed the trading career of small traders. You can still trade that over here. It's probably 2 years, maybe 3 years at the most before these rulings will come into this side of the world, and they will come in. So you also won't be able to trade on margin. That's just the way the world's working. So if you're new to trading, get learning now and get involved. If you're an experienced trader, milk it while you can. Because if you don't want to sit there with 6 figures in your account, then you want to get on board now and trade while you can still make some money. So as I say, this is a kind of an introduction. I'm keeping it pretty light-hearted, and we'll get a little bit more technical as the weeks go on. We'll certainly go through some of my favorite subjects, candlestick charting, Fibonacci, dig deep into a bit of the US data, bit more kind of, interesting stuff, about how to trade off Trump and, different media we can use, and, really just build up a picture of the markets and what we're trying to achieve. I know the trading's a little bit different over here because of the time difference, but, the markets don't really sleep. You can still trade with stops in. You can still make plenty of money over here. I've still met, a lot of successful traders over here, and, we just make the markets work for us. That is the whole point of trading. The markets will always be there, and it's just how we interact with them and how we make our money. Can we go over gold chart? Absolutely. Well, gold's something I've talked about for years now, and if you've been following my Twitter feeds, etc., I've really, I was quoted in the FT 4 years ago now, and it hasn't changed. I said there's not a fear or greed in the world, in the markets, to get back to 1300. So 1900. So if it was going to do that, it would have done it by now. So gold's been way up to 1900. But what we're trading right now, I really see 1300 being the absolute pivot point. There's a couple of reasons why I'm negative gold, and the first one is it's an old-fashioned store of wealth. It was used to be as protection against inflation. Well, we've had 10 years of quantitative easing, so we don't really know where inflation should be. Now, that's one factor. Second factor, dollar's going to get stronger. As dollar gets stronger, gold becomes more expensive. Yeah, gold's going to go down. It's outdated as a store of wealth. Look at the attraction Bitcoin's had, etc. And who holds gold? China, India, Russia. Not exactly the West's favourite people. Yeah, there's rumour that Fort Knox are empty. There's no actual physical shortage of gold. Actually, there's more gold than we ever know about. There's, mining going on at the bottom of the floor. There's meant to be over $1 trillion worth of gold. There's talk about satellites and, landing on asteroids and doing remote trading, where there could be elements of gold up there, etc. So gold, for me, it's fighting a losing battle. And with a strong dollar, it's only going to get weaker. So really, for me, once below get 1300, I really want to see it test down to these lows here at 1130, and then it's $1,000. Once it breaks $1,000, it'll probably drop $100 in a matter of a week. Okay, and then we'll start to build a new range between 700 and 900. That's what I think. But again, that's having an opinion. On a daily perspective, I just look for the high points. Yeah, red lines, close below the 50%. 1 hour, 2 hour, 3 hour, 4 hour, 5 hours, 6 hours, 7 hour, 8 hour, 9 hours. 9 hours, yeah, of selling. So you can sell every hour and make money. Yeah, a total of 71 pips. Happy days. Take that all the way down. Sell. Market consolidates, breaks through the lower fib. Where does it get to? Well, it's going to target here, 1.7. So gold is going to get today to 1.30730. If it continues down. It's as simple as that. They might not stay there. Might be a good point to bounce and buy. Because again, we can be market neutral, sell it on the way down, buy it and bounce on the way up. All about that short-term trading. So for me, gold, look for opportunities at the high points, yeah, and sell it. So again, 50%, sell it. 50%, sell it. Reject 50%, sell it. So for me, lots of opportunities to get involved. And as I say, market goes down. 4.236 is a fully, Fibonacci retracement. Market indecision, then we have another 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours of buying. So you can still buy up to these fibs and then sell it on the way down. Market neutral, buy when it's low, value, sell when it's high. That's the art of trading, guys. If you can master that, then you're going to do very well at trading. Okay, is that good enough for the gold? See the fibs, yeah. So these are the hourlies, and again, you get to your extension points up here. The 50% always the pivot on these things, and then your green areas are where you buy the market back. Okay, and once you break that through, that's a very bearish signal on the hourly. So these will redraw. All my charts are set up to redraw, but only redraw under certain circumstances. So on the hourly view, we're still very negative. So this is the next point of attraction, which is a daily point of support. So that's where gold's going to go, right there. And again, the 4 hourly. Again, you can just build up no fibs on this one because it has the right kind of movement. But you can see how the support and resistance has worked. Yeah, support, resistance. Yeah, and all these lines are all up and down the charts. You know exactly where the market's going to go to in the future because that's higher time frame trading. What's happened in the past will happen in the future. And I explained to you how I came up with all these lines and these things in another presentation. That's a little bit more advanced, and obviously the IP that I have in my kind of proprietary software is some of it is actually secret. It cost me tens of thousands of dollars to have made by some clever boffins in California. And again, this is how I've made my money, just by looking at these 8 charts, looking at these lines and, getting involved, buying, selling, finding value. Yep, automatic fib. Yeah, it redraws on certain circumstances. And the rest of the lines are taken from previous points in history. So it's a combination of things that are happening now, like these resistance points here. Yeah, the fibs, which are time frame specific and redrawn in certain instances, and the dotted lines, which are from the higher time frames of things that have happened in the past. So it's bringing through what's happening in the past, what's happening now, and what potentially can happen in the future. So clever idea. And again, I'll go through the old time frame trading in another webinar because that's something that deserves an hour of its own. All right, guys. Well, listen, I don't want to keep you. Yeah, I mean, it's free. I mean, again, if you open a CMC, are not going to offer MT4 for the next kind of month or so. But yeah, if you want to open an account, with CMC, I can give you the software because what you can do is you can have your charting software on one screen, and your trading screen on another. So as I say, I'm willing to give all my things away, my time, my software, my kind of one-to-one mentoring time for free. But you've got to show me some investment in yourself. I'm not just going to give it to people so they can turn up to the free webinar and ask me the questions there. At the end of the day, if you want to kind of invest in yourself, I'll invest some time because that's what we do here. That's what I do. And if you're going to be successful down the line, I'll make some money from this. And again, it's still a business at the end of the day. It's great that I can meet like-minded people, make some friends, and have some great chats and keep myself sharp at trading. But it is a business. But I've got to kiss a lot of frogs. I've got to kiss a lot of frogs. My top clients, my top 15 clients, it took me 7 years to get with, and people I've worked with for years and years and years, and they've taken different time. Some people have been successful over a month. Some people it's taken years. So I have to kiss a lot of frogs, to get to work with the people to get really, really uber successful. But that's what I do. That's what I've worked in. I've invested the time and I've reaped the rewards. And so have other people that have invested their money in themselves and their time in me. So again, as I say, guys, there's nothing hidden here. All I'm saying is, if you want to open an account and put some money in, you know exactly what you get. It's all on the tiers. Again, I can't be any clearer. If you want to put and get some time with me, got to put $5,000 in. We can work these things out. They're not set in stone. Yeah, but if you want more time with me and you want to be successful, realistically, you have to be looking 5 to 25, 25 and above, to really kind of, have a good chance at, at trading. It's as simple as that. All right, guys. Well, listen, as I say, this is the first one. So you're going to get sent a recording after this. I'm going to tidy up the emails that you get sent. It's still a little bit of a work in progress. So I'm not going to spam you with lots of things. I'll probably send you an email a couple of times a month with links to some analysis I'm going to do and I've done. And, maybe you should read my book, The Rough Guide to Trading. That is something, that is on the offers page that might be of use to you. A lot of people read that and then come back to me. There's a lot of references to my iView charts in that. And outside of that, again, I'm happy to start moving, happy to start speaking to people, but, don't take advantage. My time is limited, and I want to invest my time in people that are serious about training, and that means you have to put money into a live account to really learn from my experience. All right, guys, well, listen, really good. As I say, do me a favor, retweet, stick it on Facebook, Steve Ruffley Mentor on Facebook, at Steve Ruffley on Twitter. The emails you get, just send them to my site, forward them to your friends. Anything you can do to help me get more numbers on is ultimately going to help you guys. I'll turn up at this time every Tuesday, for the foreseeable future, and I'll give you my time for free. As I said, everything else requires some investment from you. Listen, guys, that was an absolute pleasure. Thanks for your questions. Cheers to the Andys and people that have turned up, and it's been enjoyable. It's been a good first session. All right, guys. So look out for that recording. And again, you know how to get a hold of me. All right, guys. Have a good evening. Take it easy. Bye.